All right, folks, we're back. 0 to 10 bagger. Still unsponsored, still a little cranky, and still fighting the retail investors' fight. So let's get right into what everyone's feeling, but maybe not saying out loud. Investor sentiment is wobbly. Like, seriously wobbly. The latest sentiment survey just dropped, and oof. Bullish sentiment clocked in at 31.6%. That's way below the long run average. Meanwhile, bearish sentiment shot up to 49%. Nearly half of individual investors think stocks are going down in the next 6 months. That's, well, that's a very crowded corner. Neutral sentiment has been taking a nosedive too. It dipped to just over 19%, well below its norm, which tells me there's not a lot of fence sitters left. Everyone's picked a side, and most picked yikes. And the bull bear spread is sitting at negative 17.5%, which, I mean, if you look back at the charts, tends to be where things get interesting. It's not just the data, though. If you've been doom scrolling headlines lately, and hey, we all do it, you've seen the drumbeat of bad news. US economic optimism has pretty much fallen off a cliff for November. There's this broad feeling of unease, even as the big dogs, Nvidia, Amazon, whatever, post surprisingly strong numbers. It's that weird split. Solid earnings, but lousy vibes. Honestly, it kind of reminds me of late 2018. Back then, we were spooked by aggressive Fed hikes, the Trump-Xi trade spat, slowing global growth, and every second headline was about tech getting hauled in front of Congress. Deja vu, right? I'm not saying this is a carbon copy, but the cocktail of reasons to sit this one out, it's all very familiar. Maybe some of you remember we talked about sentiment signals in a past episode. The invisible ways management and markets try to push us one way or the other. Right now, though, it's retail that's setting the tone. And to me, when retail throws in the towel this hard, especially when the actual numbers aren't as dire as the mood, that usually means we're at a crossroads. The question, as always, is what are you going to do about it? Let's talk about the mess under the hood. If you watch the S&P 500 or NASDAQ this week, well, it's whiplash city. We had these big early rallies on strong Nvidia earnings. Everybody's thinking, AI is back. The rally is back. Let's go get some rocket emojis. By lunchtime, every gain's given back. The market's just as happy to climb a wall of worry as it is to tumble off the other side. And what's fueling this? It's not just something new. It's the same old. Are rates not going down? Is inflation sticky? Are tech valuations nuts? All that, and then another round of headlines drop. Maybe there's some speculation about an AI bubble. It's so easy to get caught up in the minute-by-minute narrative. But this is where I have to own up to one of the classic blunders. And maybe you've done this too. Back in my microcap days, I'd panic on noise. Headline would hit, I'd sell something I believed in, only to watch it rip higher 2 weeks later when everyone realized earnings weren't actually the end of the world. I'm not saying ignore the risks. We've all seen how hype cycles work, especially in microcaps, or with those so-called story stocks. But the pain from letting emotion run the show? Yeah, been there. In fact, if you listen to our episode on red flags, you'll know how easy it is to see ghosts everywhere in these markets. But a market where the bull-bear spread is this negative historically sets up not for more pain, but eventually a snapback. The quiet truth is, when sentiment is off a cliff and the news flow sounds like the end times, That's when the pros start poking around for value. And I don't mean the kind of value that's just a discount on yet another vaporware tech company. I mean real businesses, real catalysts, but caught up in the crossfire. If you look back, just about every major market reversal starts when things feel absolutely the gloomiest. I know I'm probably repeating myself, but I feel like if you're listening to this show, you probably want that reminder more than something you'll hear on CNBC. So this brings me to what actually matters right now. Because all this negative sentiment, all this forced selling, it's about to become your opportunity window. It's tax loss season, which, for people who've never seen it up close, is that time when everyone wants to dump their stinkers so they can write off the pain before the books close for the year. It doesn't mean these companies are bad a lot of the time. Sometimes it's just people tidying up portfolios. This is classic forced selling, not fundamental driven selling. That's your chance, if you know what to look for. Here's what I like to do, and this isn't theoretical. This is what's helped me dig myself out of a few regrettable trades over the years. I start building a buy list of names that have real assets, real businesses, but just got caught in the everything must go parade. Then I hunt for what I call the tax loss victims, stocks that look absolutely wrecked, but when you check under the hood, nothing fundamental's changed. That's where opportunity hides. If they've got actual catalysts on the horizon, drill results, regulatory approvals, a contract in Q1 or Q2, flag those. And then, patience. I watch how the tape trades over the next few weeks, wait for liquidity to dry up, and when it looks like there's tumbleweeds in the order book, that's when the best bottoms form. The Santa Claus Rally is almost always fueled by exhaustion, not euphoria. I'm not promising magic, and I'm definitely not saying you just buy every loser and hope for a miracle. But terrible sentiment has a habit of sowing the seeds for serious returns. If, and it's a big if, you can keep your head while everyone else is glued to Powell's every breath. So here's the homework. Get that watch list together. Be ready to pounce once the forced sellers are done and the volume's dried up. And above all, don't let panic write your script. This season, tax loss, exhaustion, Santa Claus Rally, it's where the next batch of 10-baggers quietly bottoms out, long before the herd even notices. Stay patient, play contrarian, and I'll see you next time. And hey, if you spot a bargain, maybe keep it to yourself for a bit.